couple of years later, a couple of years down the road, he got sick and passed away. And it just really changes your perspective on taking risks and, but also taking calculated risks, right? I don't like to just take risks for risk's sake. You take calculated risks, you do your research, and then when something comes along, you got to strike, right? So like, that's kind of been my philosophy is when you see an opportunity, and it's real and you've done your homework on it, go all in.
You're listening to the Millionaires Unveiled podcast, where you'll hear the stories and interviews of everyday millionaires. We'll unveil their decisions, their strategies, and their current portfolio allocation. Now to your hosts, Clark Sheffield and Jace Mattinson.
Welcome back. Another episode of the Millionaires Unveiled podcast 227 here. This is Clark. Jace, what's going on, man? How are you?
Doing great, man. How you doing?
Doing pretty good. I heard you just locked in an interest rate. We were talking about interest rates increasing. I was talking to a friend this week, and they purchased a home a couple of years ago now at 2.5%. And now he says the rate is closer to 4%. So we're seeing interest rates increase here and probably will continue to do so. But pretty wild, 1.5% plus over the last couple of years now.
Yeah, no, they're definitely increasing. I think that's just, we've been on a bull run for a long time. There's been a lot of things in terms of stimulus pumped into the economy. We obviously are feeling inflation effects everywhere. And at some point, the Fed's only got so many levers to kind of move things in one direction or another. And we've had bottom rate interest rates for a very long time. So to some degree, I think it's good to see some movement there. From an investor perspective, it's obviously, markets all over the place with these kinds of things and reactions and stuff to, other things that outside of our control, Russia and Ukraine and whatnot. But all in all, I think it's a good thing. They needed to move away from being at zero and, get to something that's a little bit more stabilized. Obviously, it's not great for those trying to purchase a home compared to where you were maybe a year or two ago. But I think it'll be good for the greater good for the longer term. And when they drop down low again, you can refinance if you want to, just like a lot of people just did in the last 2 years.
What's your take on the housing market? You think it starts going down a little bit as rates increase?
I don't know that it goes down per se, and this is obviously just my opinion. Obviously, there's some submarkets that probably will, but I do think there might be some slowing, but I don't know that it's because of rates as much as it is just the demand has outseeded supply for so long now. I mean, we're probably going on 2 years with immediate. And if you go back to some of the data that has been published and that I've looked at, we've been running it at a deficit for the greater part of the last almost decade, really. So I think that you'll see prices at least hold. Maybe they won't increase as drastically and as quickly as they did before, but you're also feeling the effects of material increases and supply chain constraints that gets pushed down to the buyer, and so that drives up existing home sale prices as well, on a price per square foot basis in certain submarkets. So I don't know that it really goes down much. Maybe some of the coastal cities do a little bit, but I don't know. It's a TBD. That's an interesting trend for me specifically to watch.
Yeah, it'll be interesting to pay attention to it. I'm curious what happens. So this week we have a great interview with Mike. He's in medical sales, net worth of over $2 million, about 2.25. Last week we had Lewis. He worked as a welder, never went to college, net worth of 1.5. Grew up in a blue collar house and continued to work in that environment. He emailed us this week with a little update after his episode aired last week. He said he's retired, life is great. And then he says, I just want to read one blurb. He says, a lesson I had to learn the hard way is if a financial advisor says the word product, then run. He or she does not have your best interest in mind. Unfortunately, most of us are not taught this about money, and we don't know what we don't know until later in life. This is why podcasts like yours are so important and extremely helpful. So interesting to hear from him and glad he's doing well. So we're appreciative to all our millionaires who come on the show, and we look forward to this week's interview with Mike, and let's get right into it.
Mike, do you want to just give us a little about your background and what you're up to now?
Yeah, so I'm in medical software sales, which has been booming the last few months during the pandemic, and things are going really well. I'm married, I've got 2 young kids, and I'm just looking forward to talking to you guys and seeing what we can chat about here. I've got a net worth of about 2.25 million, and that's where I sit here at 40 years old.
Nice. Congrats on the success, and then we'll get into this. So 2.25 million, how is that broken up?
Yeah, so it's kind of interesting. I've got about 210 grand in cash, about 1.4 million invested. Those investments are about a little over $1 million in combined 401ks between me and my wife and retirement accounts. 250 grand in TD Ameritrade account, some HSA funds, some 529s for the kids, and the rest in property equity from some rentals that I have and primary home.
Dang. So, okay, let's break this down a little bit. You mentioned you got HSA. How long have you been in contributing to that?
The HSA I've been doing for about, I think, 5 years now. I don't know if I jumped on it the first year that my company offered it, but definitely within the first 1 or 2 years I jumped on it and started socking away basically the max in that. And using our primary fund, or using our funds from our income to cover most of our, costs for healthcare.
Yeah. So strategy with that, are you investing those funds as well?
Yeah. So those are all invested. I keep whatever the minimum amount you need to have in cash. I think it may be just a little over $1,000 in the account, and then it gets swept into some investments. Just some, I can't even remember if it's mutual funds or some kind of index fund, but just some kind of, market index fund there. Yeah.
So how much in your HSA? Sorry, Jason.
About 33,000.
One of our higher.
Yeah. And you plan to continue that strategy for how long? Meaning you're paying these costs out of pocket, continuing to contribute to that fund instead of using those funds to pay for the medical, correct?
Yeah, I mean, really, as long as we can. One thing I didn't touch on is my wife and I are fairly high income earners, and we live off a small fraction of what we bring in. So I don't see us changing that HSA strategy or needing to change that HSA strategy unless there was something severely catastrophic that came on.
Yeah, and then do you save all the receipts?
I have started that. I hadn't done that really any very religiously, if you would, for a while. But this year we kind of just started like scanning them into our iCloud account and just saving them there. But yeah, we haven't done that on any substantial rollout. But I have started.
Okay. So as you've gone on this journey, how much of this is in your retirement or slated for retirement funds then?
Yeah, so we've got about 1.1 million between 401ks and retirement accounts for myself and my wife, and I have about 6,000 in a Roth IRA, which I did a rollover. I did a backdoor Roth this December just to do one because I hadn't done one before, and I was curious on doing that process, and it was super simple. So I'll probably do that for my wife and I as well. So we've got quite a substantial retirement fund there.
And all the rest is in traditional?
Yeah. So I've got, I could tell you here what we've got here. I've got, in our retirement, blue chip stocks, market index funds, Fidelity index funds. In my Ameritrade account, I've got a pretty substantial amount of Apple. I had bought Apple starting back when I first got out of college. I sold it all to buy our first condo when we moved to Philly. And then I started buying back in 2009. So I've been through a few splits. So I've got about 126 grand in Apple stock, 72K in Vanguard high dividend yield ETF, 13 grand in John Deere and some Goldman Sachs and some other dividend funds. I've been dabbling a little bit this last fiscal year or last calendar year in REITs. In 2020, the beginning of 2020, I made a judgment call, and I basically said I was sitting on a big stockpile of cash. Probably think I had about $340,000 in cash, and I said, all right, well, I need to invest this somehow in the market and in properties. So I basically set up a $2,000 a week drawdown from my savings account into my TD Ameritrade account and just started buying some index funds and some dividend stocks. And I did that all through 2020, through the downturn, through the crash, through the rise back up. So I've seen a pretty big swing in net worth in the last 12 months. And additionally, I also bought two rental houses. So basically, I took all of my income and invested it in the stock market and in properties in 2020.
Wow, that's pretty crazy. So what, if you don't mind me asking, I guess at the beginning of 2020, where were you at? And then obviously today you're 2.2 million. So what was that increase over the last year?
Yeah. So according to Mint, I could tell you exactly because I've been tracking stuff with Mint since about 2009, 2010. If I look at Mint, it tells me in a year, my net worth has gone up $706,000.
Wow. Say that one more time. How much?
$706,000.
Holy cow! How?
I mean, I had a lot of investments. I plowed a lot of cash. I front load my 401k. So because of my high income, I put my 19.5 in basically within the first 5 to 6 months of every calendar year, so that you take advantage of the drops and the increases. It's pretty crazy. I mean, if I look at my all time from 2010, it's a $1.9 million increase. So I went from basically 350,000 in 2010 timeframe to 2.25 now.
Wow.
Yeah.
Wow. Good for you.
Yeah.
So you mentioned the real estate. Let's just jump back to this allocation a little bit. How many rentals do you have?
So I have 6 rentals and a primary.
6 rentals, and what are they? Single, multi, commercial?
They're all single doors. 2 of them are actually in condo buildings. I'll give you the breakdown here. 1 second. So I've got over here. I've got a condo in Philadelphia, and that one rents for about $2,350 a month, and all the principal, taxes, insurance, and everything is about $1645. So I make about $705 cash flow on that.
Wow, that's good.
Yeah. And I'm actually in the middle of a cash out refi on that. Just finalized the paperwork today, so we'll be going to closing. I'm refinancing it down to about 3% interest mortgage. I'm pulling out $48,000 in cash to do some other investing with. And my mortgage payment is going down about $50 a month. So I'll be cash flowing a little bit more on that property. So I really am going after kind of the cash flow play on the rental properties. I've got 2 turnkey rentals. So I dabble in the turnkey because, just with my personal job, it's, very demanding. My wife's got a pretty demanding job. So we have a couple turnkey rentals. And that's just nice because we can invest in those and not have to pump a lot of energy into those. And, those cash flow, $378 per month and about $213 per month on those.
Those are single families?
Those are single families. Yeah. One in Memphis and one in Little Rock. And we always
through like Memphis Invest or one of those companies.
They're through Mid-South. Yeah.
Mid-South home buyers. Yeah.
Okay. Yeah. And we always, with all of our rental properties, we always put 20 to 25% down, because, and we can usually get a little bit lower interest rate if we put 25% down. So I don't believe in being super over leveraged. I want to keep a good bit of equity in all the properties.
Smart.
Yeah.
So let me just so that's 3, right? And then just real quick. That's
that's 3. I've got another condo townhouse that I just bought in November. And that one I bought all cash because I was, it was $135,000. I'm getting, $1,450 in rent. I basically put some paint and I put about $3,000 into it, and flipped it and started renting it in a month, after I bought it in November. And that one's, basically cash flowing, I think, roughly, after condo fees and everything, like $1,100 a month.
Nice.
And then the coolest rental I have is, actually internal to the family. My mother-in-law and father-in-law wanted to move down to where we live, and be with the grandkids. They were like, "Oh, well, we'll buy a house down by you." And I said, "Well, why don't I buy the house in case you want to move? And you guys can just rent it from us, and we'll take care of everything." So we have and they help us with the childcare. So that one, I just refinanced that one and our primary residence in November, and that one doesn't cash flow as much. Cash flow is about $300, but it's not going to cash flow any more than that because we're going to keep the rent nice and stable for my in-laws. So that's a nice one as well.
Yeah. So 6 was counting your primary.
Yeah, and then we're actually closing on a rental the next on March 3rd. We're closing on a shore house here in Delaware that we'll rent out during the summer weeks, and we'll have on the shoulder season for us to go to as a getaway. So we're closing on that in March.
So the turnkey ones, I assume you hire a property management company?
Yeah, so that's all. When we actually buy it, there's already someone in there renting it when you take ownership of it. So somebody's already renting it. They already have it filled. There's already a tenant. So basically they turn it over to you already rented. It's all fixed up. It's been basically, got renovated. It's all done remotely. The same company that we buy it from, they do all the property management. We actually have had some tenant non-payment issues with them. And what's been really awesome is that they've worked with the tenants to get them back on track. We haven't had to evict anyone. They put them kind of on a payment program and gotten them back on track. One was pre-COVID, so it had nothing to do with COVID, and then one was actually like December timeframe, Christmas time this past year, and they got them back on track, and we've been paid in full, and we haven't lost any money on those investments.
How long have you had those?
So the first one we got in Memphis, we've had for about, I think it'll be coming up on 3 years. And then the one, and again, the one that in Little Rock we purchased, right in April of this year. So I won't pat myself on the back, but I kind of took, Warren Buffett's, when everybody's scared, when there's, go
be
in
fearful when others are greedy and others are fearful. Yeah,
exactly. And so that was, I pushed a bunch of money into the stock market when the market crashed. I pushed in. I had this turnkey rental that I've been waiting to purchase for a long time, and I said, well, what are the odds that this turns bad for me? And I said, well, if I've got this team of people managing it, it's worked out well. So.
Yeah. And have you had it sounds like you've had a good experience with the turnkey ones, right? No issues.
Yeah. And again, they probably don't cash flow, and they're not as, you're not getting every dime of ROI that you possibly could. But for our situation where we've got, these busy jobs, that we're doing, 9 to 5, two kids under 4. It's nice to have a couple of them where I don't have to manage them because the other ones the other ones I'm managing myself.
Okay, that's what I was going to ask. Yeah, so I called that company. I heard about them on our podcast. When, Jace, a couple years ago or something. So I called them up, or a year ago maybe, and I said, hey, I heard you guys, blah blah blah. Like, what's your process? Let me hear about what you guys do. And they told me they were a year out from accepting any new investors. Pretty crazy.
Yeah. Once you're on their list,
there's an opportunity, right? You have a backlog of a year of investors that want to invest with you.
Yeah, and I've got a bunch of my colleagues that I work with. I got introduced to them through one of my colleagues, and since then, a few other colleagues have purchased from them. But yeah, they're about a year. And I actually just emailed them and I said, hey, when am I up on the list? And they said we've been a little backlogged with COVID and not being able to pick up as many properties, so probably this summer. But I just kind of treat it as I'll probably pick one up from them a year as long as the ROI is pretty decent. So yeah.
So, Mike, how much total cash flow do you have between all the rentals now?
About $2,700 a month. I just ran that number the other day. So,
nice.
And I did purchase the condo townhouse in November near me cash, and put, it was about $135,000. I'm probably going to do some kind of HELOC or cash out refinance on that within the next, 3 or 4 months, just because with interest rates being around 3% or so, I can't see locking up all that money for that long and then put it into something else.
Yeah, totally.
I'd like to get to about 10 doors and then see where we're at and see if I want to keep going or not.
And you said that was $135,000 that you bought that for?
Correct.
Wow, that's pretty great.
Yeah. It's I found that deal, and then the shore house that we're purchasing in 2 weeks. That's also a deal. It's the cheapest house in the nice area that needs a ton of work, that needs, all new windows, needs, all new siding, needs everything. But, if you're willing to put in the work and the elbow grease, or find a diamond in the rough, you can do that. I actually got both. I got the townhouse condo under market value, because I paid cash. And that's kind of why I did that. I wanted the experience of purchasing a place cash and seeing, how that all worked. So that was an interesting purchase. It was, quick to close, offer 20 days later close. And that worked well for the seller. They wanted out.
Gotcha.
Yeah.
So, Mike, I got to ask, you've got all this going on with the rentals and the retirement accounts and HSAs and everything. When you're looking holistically at your finances, and when you make $1 or 10 or 1,000 or whatever, how does that flow start, and where do you put your money first, second, third, fourth as it relates to your investments?
Yeah. So, first of all, we pay ourselves first, right? Meaning we pay our retirement accounts, we pay our health insurance, we pay our HSA, we pay the kids' college funds. All that stuff gets auto deducted and auto transferred, and we don't even see that money, right? So that's the first thing. Like I did mention, I front load my 401k. I push it in as fast as possible because I have commission checks and things like that. So kind of more time in the market. I play by that theory with my 401k. My wife, we do over the whole year, and we just divide it evenly up. So that's kind of the first thing. And then basically we keep our spending extremely low. I've tried to run some analysis. It's a little hard because I've currently got all my rentals and mortgages. I'm working on splitting that out from kind of our personal finances. But I think with our mortgage, we spend somewhere in the neighborhood, with our personal mortgage, we spend personally somewhere in the neighborhood of about $6,000 to $7,000 a month, and we're saving a significant chunk of our income. We're saving somewhere in the neighborhood, if Mint tracking is right, our positive cash flow a month is about, on top of that is, and all our other expenses, about $18,000 a month we're socking away into savings. So I just have like a super high savings rate. But again, we have a really high income. We live well below our means. Our mortgage on our personal house is under 6% of our monthly take home income. So it's, we just live super, super low below our means, and we make a lot of money. And that's, I think a lot of people forget about leveraging how much money you can make at your day job. And that's key. That's key to being able to do all of this stuff.
Yeah,
because
totally.
if we didn't do that and have a high savings rate, you can't pinch out enough cappuccinos or Starbucks to overcome making an extra $50,000, $60,000, $70,000 a year, right?
Yeah, totally. So, are you wanting to retire early at all?
I have that thought in my head. Myself being 40 years old, I lost my dad at a pretty young age. He passed at about 55, 56 years old. And so I have that kind of in the back of my mind. He worked at a job he didn't like, and kind of, didn't, always was wanting to retire. So in the back of my mind, I'm like, I should retire early so that, I can actually enjoy that time. But I'm not sure that I'm not sure that I could, because I've got a lot of energy to do a lot of different things. I don't know that I would actually retire. I would maybe pivot and do something different. My wife is she's a doctor, so we might maybe start up a practice for her at some point or something like that, and just kind of have her business be our family business, and maybe I'd step away from my job where prior to COVID I was traveling 3 or 4 nights a week, and all that fun stuff.
Yeah, totally. So do you envision increasing lifestyle at all?
So in the last probably year, we've been doing some of that. We've done some improvements on our house. Obviously, like everyone else with the COVID times, you're staring at your walls for a year. You want to improve your place. We kind of do whatever we like. We don't really budget anymore. We don't, have like, okay, well, you can only spend this on food. So part of the shore house and doing that as a summer rental is also a place for us to go and enjoy. And it'll cost us a little bit more, to have that, right? It's probably not going to be in the Northeast. The beach season isn't that long, right? It's not like if you had a Airbnb in Florida, it'd be rented for, 12 months out of the year. So we'll probably enjoy that getaway space a little bit more. But yeah, that I think is probably personally the hardest thing for me, because I didn't grow up having a lot, is to relinquish, saving and spend some more, right? I drive a 16-year-old Saab, which I keep in good condition. I don't have a new car. My wife's got the nicer, quote unquote, new car, but even that one is, 6 years old. So, so that's probably something that we'll explore is just living a little bit better, right?
Yeah, it's a hard shift to make, right?
Yeah.
So let me just jump back here to something you just mentioned. To Jace's question, your dad passed away a little bit younger in life, and I know we talked about that before we started recording. But as much as you're comfortable sharing here, just tell us a little bit about that and maybe how that's affected you.
Yeah. So with the real estate thing, my dad had kind of when we lived in Florida, he had purchased a couple of rentals. So he had 2 rentals and then when we moved back north, he rented out our primary home. So I kind of got a little bit of exposure to that. I was still pretty young, when he was doing that. I was, 8 to 12 years old when that kind of went down for him. And then we moved north and the prices of properties were a lot higher. That kind of, I think, scared him off of, he wanted to do this, but he couldn't, kind of wrap his head around how do I, figure out getting financing or doing this at a much higher price than I was doing where we lived in Florida. And he was a guy that could do everything, right? So he could build an extension on a house. He could do the electrical. He could do the plumbing. He could do basically anything, right? So he didn't even need a contractor. If he had wanted to, he probably could have, done this in a big way. But he just kind of lacked the motivation. You get locked into your day job and taking care of your family, and maybe you don't want to take some risks, right? So that kind of gave me a little bit of perspective. And then, when I got out of college, I moved to New York and got a job and was working. And a couple of years down the road, he got sick and passed away. And it just really changes your perspective on taking risks and but also taking calculated risks, right? I don't like to just take risks for risk's sake. You take calculated risks. You do your research, and then when something comes along, you got to strike, right? So I think that's been that's kind of been my philosophy is when you see an opportunity, and it's real and you've done your homework on it, go all in, right? And that's with your career or with rental properties or whatever you've got.
Yeah, you mentioned, your risk, right? It makes you think about risk and your risk appetite. In what way? Yeah. Being more careful or wanting to take more risk because you know that life could end sooner than you hope? Yeah.
So I think probably in both, right? You take more risk because you're not guaranteed anything. But you also want to be careful with that risk because, and now maybe even a little bit more, you think about, you've got kids, you've got a family, you got to take care of this. I think that when you're taking those risks, you just have to have all those pieces, right? And some of it is, I've got this family, I have to take some risks, right? I can't just rely on my 9 to 5. What if I get laid off or what if, those type of things. So having multiple income streams, multiple buckets, all that kind of philosophy. I think that kind of shaped me into thinking that way, right? Like take some risks. Don't be scared to take risks and go from there.
Yeah. So for me, it seems like that risk is coming for you through these real estate purchases, 5 or 6 different rentals. Is that right?
I think that's probably the most. Obviously, we've got some stuff in the stock market, but most of the risk is in the rentals. I feel pretty confident on those because I've done pretty hefty down payments on them, or own some of them or that one outright. So I feel like there's not much that could cause me a problem. And then again, because if you have a high income and high savings rate, you can always cash flow a problem, right? So if you've got 200,000 in cash, you could not have renters for years, right? If you needed to, which would never happen. Or 200 if you have a bunch of money in a stock market account that you could pull out if you need to for an emergency, right? So if you can cash flow that kind of thing, you're pretty much stable and safe.
Yeah. Yeah, so let me push you on some of these rentals, and not the turnkey ones necessarily, but the ones that you self-manage. How do you find them?
So the condo that we had in Philly was our primary residence, and then when we relocated down to Delaware, we just rented it out. So that one was pretty easy to find. We actually did purchase that. It was our one of my friends from college actually owned it. They were looking to downsize for a little while to save up some cash for a down payment on like a townhouse in Philadelphia. So we bought it directly from them. So we didn't have any realtor fees on that property. And then the other properties that we own that aren't the turnkeys, we've found on the MLS. I mean, just got to hunt and run some numbers and have a good relationship with your realtor and say, literally the one I just bought in November, the little condo townhouse, 1,200 square feet. I literally snapshotted the photo on realtor.com and texted it to my real estate agent. I said, "Hey, what's the deal with this? Can you talk to your people about what something like this rents for?" And he ran some rental comps and talked to some people in his company that do rentals. And he's like, it'll probably rent for somewhere around $1,300, $1,350. And I said, okay, well, let's go take a look at it. So we took a look, put an offer, put some paint on it. We put it up, the same realtor put it up for rent for $1,450, and we got $1,450 for it. So,
boom.
And
then I think you mentioned this at the beginning, but how leveraged are you? Not very, but I can't remember the exact percent.
Yeah, so I keep about all my properties have at least 25% equity, except for the one that I own. I think I didn't run that number for you, but I could probably find it relatively quickly. My mint's a little wonky on that.
And then the one that you're doing the cash out refi, that's the main one, that the condo that you previously lived in, right?
Yeah, so that's the condo in Philly that I previously lived in. Correct. Yep.
And how come you're doing that versus just letting it sit and build up equity and cash flow more?
That's a good question. So I go back and forth with myself, right? Do I want paid off rentals or do I want cash flow? I was actually with that one. My initial plan before we were purchasing the shore house, because the shore house kind of just came up and it was a good deal and we decided to do it. My initial plan with that was to pay off one of the turnkey rentals with the cash out, because the turnkey rental is sitting at about 5% interest. So I was just going to pay that off. I have kind of that real estate investor's dilemma of, do I want more properties that are cash flowing and building the equity, or do I want paid off properties? And I'm not sure what the answer is to that yet. So does that make sense?
Yeah, no, totally. No, I think Jay's kind of going through the same thing. It's an interesting take on going back and forth on it. So, working with the bank, so you're going to own real estate in what, 4 different states here?
4 different states. Okay,
so 4 states. Are you working with different banks in each of those? Are you working with the same bank? How do you manage that?
Yeah, so my couple here in Delaware, I've worked with the same bank for the one rental and for my primary. For the cash out refi in Philly and the shore house, I'm working with the same bank for a different bank for those two, and then for the turnkeys, I've worked with the same bank for both of those. So I've got 3 different banks across the properties.
And once you get new loans, which loan was the hardest to get, if any? Was it harder to get the first and the second one? Is it harder to get the 5th and the 6th?
Honestly, we haven't had any issue. Again, just because of our low, our personal low rate mortgage rate. We don't have a big mortgage for our personal house, and we have such high income. For the last the last few that I've done, I haven't even had to really show income from the rental properties for them. So they really haven't been that difficult. I don't know that we've actually talked about income. I don't know if that's helpful for you all, but I make about $270,000 a year, and my wife makes about $130,000 a year.
Wow, so great income. You're at 400. What did you start at when you were both started working your full-time job?
Well, we both started out. I started out in 2002 in New York City making $42,000 a year, and my wife started out in Boston making, I think, $35,000 a year.
So 87, let's call it.
Yeah,
that's tough, man. In New York, $42K.
Yep, $42K. I had a $1,600 apartment in Astoria. I split it with a buddy. It was an interesting setup. It had four rooms. I wouldn't call two of them bedrooms. I would call them two of them rooms that beds fit in. And so we each had kind of a room that we had like our little office set up or whatever. And then we each had our own little room with our bed in it. And then when he moved out, I house hacked his two rooms and had two roommates on his side of the apartment. So I took over the lease and I rented out those two rooms, and then the rest is history.
So I saw one day riding the subway, because I live in New York, obviously, there was a Street Easy ad that said something like, sure, your window faces a brick wall, but at least behind that brick wall is New York City.
That's right. I always
thought that was funny, right? Some of the things that people go through to live in this place.
Yeah. I mean, I would say living in New York kind of set me up for success. When you move to New York, you've got to struggle, you've got to scrimp and save, but the really cool thing is when you work for some of the big places there, you can have your transportation, your Metro card can come out pre-tax, right? So, I was paying for my monthly Metro card, probably before tax, $72, and I had no car payment. I had no car insurance. I had no gas. The only thing I needed was my Metro card, and I could be anywhere in the city. So, you don't have a lot of overhead. Your overhead is your rent and your Metro card, right? And
if you can get rent under control, it's really it.
Right, exactly. And food's cheap. You can eat out every night of the week. You can have your laundry done for super cheap.
Yeah,
and all that kind of fun stuff. So. Yeah, but
everybody says groceries and everything's so much more expensive, but I actually find the only thing that's that much more expensive is rent. I mean, between insurance and gas, you're going to pay less on transportation. Groceries are about the same depending on where you go, but you can easily find it for the same or cheaper. It's really rent.
Yeah. And again, most young people when they move to the cities, they're going to have roommates, right? So as long as you're willing to live not in downtown Manhattan and or in Midtown, and you're willing to live on the outskirts and commute into the city, you can find some place. You might have roaches, but
and mice and rats
and mice. Yeah, you'll figure it out.
So, Mike, before people heard this story and listened to this podcast, did your friends and family know you're where you're at, 2.25 million?
Yeah. So. Probably not exactly. Definitely not family. Some of my colleagues. So some of my colleagues that I work with make even significantly more than I do in the sales field. I think that's also been helpful. That's one of the reasons why I really loved finding your podcast, was because it was people like me, right? People that were, again, you can listen to enough podcasts about, cutting your cable or, not buying a cappuccino. But once you're kind of, trying to increase your net worth, where do you go? Who do you turn to? And I found your podcast, but I also have a good cadre of colleagues and coworkers who, a bunch of them have rental properties. A bunch of them are doing, interesting things. I was talking to a buddy actually yesterday, and I showed him the little beach house that we're buying. He was like, yeah, I bought this 120 acre farm in Missouri, and we're going to make it into a little hunting, we're going to put a little lodge here. And he's showing me the Google Maps, and, so, just being around people that are doing different things, gets your ideas going. And yeah, I can't say enough for your peer group. I have peer groups that are not in the same mindset, and they're great to hang out with. And then when I want to talk about refinancing something, or, throwing something against the wall and seeing if it sticks. I called my other buddy who does a bunch of real estate investments and what do you think of this? No, don't leave your money in there. Cash out, refi that. It's under 3%. It's, you're dumb to leave it in there, right? So like you get actual feedback from a bunch of different places and help you make decisions.
Yep, exactly. So as you look back at your growth of your income and your net worth, if I put income or net worth on one side and happiness on another, what's the correlation? Anything?
I think happiness has to come from within. I don't necessarily know that money or net worth is going to change who you are as a person. I think that's something that we all have to work at, right? Whether we're making $40,000 or whether we're making, $200,000. I think that it can give you more comfort, but really that's got to come from within you if you're going to be happy or not. And, cause you can always want more, right?
So what drives you, Mike? And has that shifted?
Yeah. So I think initially, probably wanted to, your ego drives you and you want to prove to others you can do stuff, right? And so I think early in my career, I kind of wanted to prove to colleagues or coworkers or to my parents or to my friends that I could do something or accomplish something. And then now it's more, it's more personal, internal drive where it's like, all right, well, I'm saving all this money. I've got a high savings rate, but what am I going to do with it? Right? What's it mean? Right? I could just sock it away into a bank account, or I could do something with it, and I could, make a difference in my family. Create potentially, some generational wealth. I don't yet know if, I also want my kids to have some drive, and I don't want to just hand them things, right? So those are all interesting questions that you'd think at 40 you'd have all that put together, and you don't.
No way, man. We asked that, and I don't know that anyone has that all put together. How old were you when you became a millionaire?
So I was about 36, 37, so it wasn't that long ago. Yeah.
Okay, good for you. Yeah. Any book recommendations, product recommendations that have been helpful to you?
So I'm not huge on books. I do listen to a lot of podcasts, especially when I'm out walking my neighborhood during the COVID lockdowns. I do listen to a lot of podcasts. One book I really did like, and just one topic I'm really interested in is The Power of Habit by Charles Duhigg. I don't know if you guys have read that one, or if that one's come up frequently. Yeah. I just think that, especially for people that are, they have their career, they have their side hustles, they have their, investments, their real estate, whatever. You're trying to do tons of different things. How do you make best use of your time? And how do you create the habits that allow you to get your job done, your career job, your W-2 job, your side hustle job, your rental business, your family, right? Like, I think habits are really key. And that's in the last kind of couple of years, I've really started trying to build habits that are positive. During COVID, I lost about 40 pounds, just changing diet and
good for you.
Also not traveling, right? Because that's always breaking your habits when you're flying places and in different time zones. That really helped. But I think changing some habits, getting up early and working out so that that's already done and you don't have to think about it for the rest of your day, right? So just those things, I think habits are key for people that want to be successful, and by no means am I perfect yet.
Well, you're doing great now. 2.25 million, 40 years old. So awesome. I mean, way to go. And thanks again. Really appreciate you coming on. Thanks for sharing your story. Really good stuff.
Pleasure.
Thank you.
Pleasure. Look forward to your podcast every week. Thanks so much.
Thanks, Mike.
Thanks for listening to the Millionaires Unveiled podcast with Clark Sheffield and Chase Mattinson. For more stories, investment opportunities, and information, check out our website at millionairesunveiled.com. See you next time when you'll hear from another everyday millionaire.